Well, good afternoon, everyone. Scott Henderson, shooter. Of course, at the end of our presentation, please do review our disclosure. And since I have no one here today, all right, let's take a look at the dollar. Now, note how we got a little bit of a push and indices did not come off here. So, again, contrary to what we would expect, the dollar climbs, we should expect equities to come off a little bit. And, one big factor that happened this week as far as liquidity was what MicroStrategy started doing was selling Bitcoin to offset their dividend they had to pay out. And I was expecting to have, just a flat out drawdown from that, and we didn't get that. So, I'm still coming back to the consensus that this market is extremely manipulated right here at this point, and I don't see why that should change. Obviously, we're in a war with Iran, even though it's not technically a war because Congress hasn't approved it, but hey, that's another thing. So, again, I think, this is still neutral for me as far as equities because we're not seeing the response that we should. Now, at some point, it's going to matter, but I can't tell you specifically when that's going to matter. That's for sure. All right, let's take a look at TLT. Now we started pulling back this, 85, hit a little resistance, wick off. I expect it's this test here. I'm mixed. I mean, we got some decent option flow coming in this week. And I wanted to add a piece here, but something tells me it just wasn't going to work. I'm watching all these names getting these bids and then we're getting rejections. It's not following through. So the question is, why would TLT be any different? So that's sort of my mindset. Again, we test this 82.42 again. I'm looking at somewhere along this equality line. Then I get a little more aggressive, just a tad bit more. I mean, all we really needed was about 35 or 40 cents. That would have given me some conviction that we're there. Just Microsoft runs and then it gives up $14 today. Meta gave up, $10 yesterday, but it ran 25 today. Tomorrow it'll give up 15 or $20 again. So the extreme that's coming in there, I think, is something that we're going to see across the board. And some of the metals are getting a decent bid. Copper got a decent bid this week. So I would think, specialty metals, platinum, as well as gold and silver should start running again soon because of the scarcity as far as the acids required to process those. I think that's going to start hitting the market a little bit more. All right, let's jump over to the SPY. Now, we're just like a perfect impulse map here to the upside. I mean, we're confirming here, so this is kind of our third drive. If you look at the price here, we're still confirming on this mound. So what that's telling us is that we're going to get at least one more higher high in price. And it probably sticks to this trend line that I have up here, which is really just a deeper version of the wave. Let me jump out to the monthly, just to give you a visual here, because I think we got some significant upside. This is that mound structure that I'm looking for. And right now it's done nothing wrong to suggest otherwise. I mean, right now it's solid. And I would love to get a pullback, but I'm just not chasing it up here because just nothing sticking that and I don't want to take the heat. So that's sort of my 2 cents. Crypto coming off too is, adds a dynamic there because that liquidity seems to be going into metals and seems to be chasing the AI race. That seems to be where it's going. So let's look at the NASDAQ. Similar look, a little bit of a broader mound structure, has much more upside here than the S&P at this point as far as the slopes or trajectory. We now are above this slope that I have, which targets the 2618 at $1,200 from where we are now. So this is one hell of a run if this sticks and we don't have some kind of catalyst that comes in and takes us out. Now, that said, the Japanese bonds are raging and they are out of control. And the yield control that Japan is using is not working. So that means that at some point they're going to have to intervene. And I'm sure the U.S. is involved in that in some way. And the most likely outcome is they get in a position where they have no choice but to raise. And maybe we see a full point raise just to shut it down and get it back in line. But that will just clobber U.S. equity. So that we want to be mindful on holding those positions. Now, if we look at the survival score from this week, last Friday, we popped way the heck up there, even though the VIX was down. And the reason is because of that volatility that we're seeing in the 20-year and the other factors which are indicating their stresses in the financial system. So all we really need is just a catalyst to sort of pop the bubble. And, we're at risk of we can see a 20% drawdown off of this correction. So, we have peaking drive 1, peaking drive 2. Let me attach this back to equities, peaking drive 3. Then we're going to get a corrective leg. There would be nothing that would prohibit us here from getting a fairly deep, let's say, for example, we get to this 1618. Then we come back and test the shelf. The shelf doesn't hold, so we test the floor. Then we get our B, and then we get a C. And this becomes a leading diagonal, which I don't have mapped here, which is pretty aggressive. But it's viable, especially with issues going on with Japan and liquidity issues and what we're seeing, because Bitcoin right now, I think it could go down to, 50, 55K in that range. And with that, let me jump, let me do 70s first. Now, SMH, we're hitting our 3. We should be right. I mean, maybe we push to the 2618 and then we reject it and be a little higher. That actually will raise us up a little bit, at least probably 795 from where we are. Again, we're confirming, so we're looking for at least one more high. Now let me jump over to Bitcoin. And this morning I got up and I said I should just short it, and I don't know why I didn't short it first thing this morning. When I looked at it, it was like 5 a.m. I looked at it, and I got tied up with something else and didn't put anything on it. And, obviously I regretted it at this point because we're down $2,000 from where I was looking at it. But once it takes out this shelf right here, I'm going to move this down just for a visual. Once it takes out that 61, it's just a flush. And the only place for it to really catch is around 47. There's really nothing between there. There's nothing. There's no support there. None. So once this shelf breaks, right, it's open air. It's huge air pocket. So looking at this is an impulse leg down. Got a shallow B. C could extend. So we could literally have a reversion to the mean here in Bitcoin down to 16K. I don't think that's the case. I would hope that we don't get it here. But again, structurally, what we have here is really a head and shoulders prop with an impulse, peaking drive 1, peaking drive 2, peaking drive 3. So, if it is a head and shoulders, it'll do something like this. This will be its left shoulder, head, then it'll come down something probably about this slope like this, and then it'll put in the right shoulder, and then it'll come back and either take out the low or just come back to this line here. So, structurally, I can see what it potentially could turn into. And once it broke this body of this candle at 68K, it was over with. I mean, we got the push lower on it. We got a dead cat bounce, technically speaking. So we should extend the length of wave 4. I'm just going to put a little line up there. We should extend roughly equal to, this would be an equality flush. So it should take us down to 57, which, I made a comment earlier in chat, 56K was viable here because that's where I saw equality as far as that happening. All right, so let me jump to IBIT because we had some questions about IBIT. I don't actually have this mapped out, so we're going to do it real quick here. But this is just fading hard and fast. Look at how distinctive that flush is. Now, it's not confirming here. It's diverging. Now, structurally, when I look at it this way, first thing I see is this is our first push lower, took it out, equality. Maybe I'm a little long there, but this was our first confirming low here, but it wasn't confirmed because it wasn't the lowest low in price. Now we got the lowest low in price and it confirmed. So what's that tell us? We should be looking at least one more lower low in price. So then I come back to equality. So let me throw some fibs up here and give a little visual of what I see as equality from a fib standpoint. So now we've taken out the 1618, right? So once we take out this $31, $32, it's down to $24 because that's your next shelf for it to go down to. So the likelihood is that we get a divergent low here. So this is probably our low in RSI. It might drift a little lower, but I don't think we take this out. And, that would be a confirmed low, even though RSI is divergent. So that structure, just come out to the weekly, make sure I'm seeing this the right way. So you have 3 drives, you have an impulse corrective leg, and ABC structure with an impulse down is what it looks like to me. Damn, I still can't believe I didn't put that short on there. Okay, so it's an ending diagonal. So ending diagonal typically can be a flat at 35, so it could be close to ending. Most likely place is right here on this shelf at 31.42. An extension would be here, right? Not elongated, extended would be 28. Elongated could take out this prior low at $22. And right now, if MicroStrategies sells another lot like they just did, we could go there very quick. So that's just my 2 cents on that, because that just panicked the market. And the lower Bitcoin goes, the deeper his problem is, because we had all these arguments in interviews about the fact that he could never go bankrupt. The reality is that whole fund could blow up, and he could actually end up in prison over that, because there's going to be no way that he can recover from that, and they will find some way to find misrepresentation or fraud charges, because he presented that Bitcoin could never go that low. And he also made statements about that they couldn't be liquidated. Well, they could. At this point, Bitcoin goes down to 20K, they're in serious trouble. All right, let's take a look at some of our names. Now, Zscaler is just kicking my ass here. Now, I want to go back to Google. One of the reasons I'm holding this is Zscaler is the most likely candidate for the $80 billion, or a piece of that $80 billion that Google just borrowed on a B plus rating, right? And, I kept looking at that, and the reason is it caught my attention because, we got this debt wall. We got all these small caps, and a lot of these small firms cannot borrow money right now. I mean, it's actually, so when you have a AAA rated company like Google that borrows money, which is, by the way, the reason the stock is off is because they discounted the shares to Berkshire Hathaway, and none of the investors like that, so they pulled out because it implies they don't have enough cash in the coffers to build the AI engines that they want to build, which is why they're borrowing money. So everybody's expecting at least one more large capital raise that probably is equal to 80 million or larger. This was probably the first tranche just to get it started. So once the news comes out that Zscaler has a chunk of that order, the dynamics of this scaler absolutely change, because it will go from where their current I'm not sure what percentage it is with Google, or what they've built, or what centers they're leasing with Google. But once they get like 5 billion or 2 billion coming into their coffers because of that one large scale contract, this thing just pops, and frankly, it can take out these highs. There are very few scalers who are capable of building as fast as what these AI engines need. And right now, Zscaler is one of them that really hasn't announced a big contract like that that's market moving. And I think it will just absolutely turn around. The reason is there's a limited number of companies that are capable of doing it. So that's the reason I'm holding it at this point. And if we end up having to buy those shares, then we sell another piece and do it again, because that's one name that I want a piece of, because I do think we're going to see new highs off of that 300 at some point. Now, Interactive Brokers is a play off of the extended trading hours for me. In other words, I'm positioning myself because I know for a fact that extended trading hours, and the fact that they have now removed the day trading limits to all the small retail investors with less than 25 grand. They basically have removed that cap. Basically what that was is you could basically put on one trade, and if you trade too many trades in a week, they'd freeze your account for them. That's gone. So all of those in small cap, those small time investors are going to be paying the brokers fees like Interactive Brokers. And now on top of that, Interactive Brokers is also going to be, once the SEC approves, they sort of put a stop on it, but where they were selling basically NFT versions of a stock that wasn't attached to the stock in some way. And actually it scares the hell out of them because they really can't control it. So they just shut the whole system down until regulation can come in some way to administer it. But my feeling is that the international sellers of similar NFTs are going to take such a chunk out of the CME exchange that they have no choice but to launch it in a very short period of time, because that's what will happen. It'll be somebody in Singapore like that starts selling it, and it just becomes like the theme for investors, just like the meme coins, etc. So, and on top of that, we have crypto declining. So you're going to have more crypto traders migrate towards that trading as far as Interactive Brokers, and that's why I'm holding. Now, Hive is really my play, that one play that I'm holding in crypto right now, simply because I think this gets monetized for AI. I think their data centers, this is one of those names. I like to look at the chart where we are. We've tested this little breakout shelf first. We really need to get back above about 691. I'm only looking for about a double on this, back to about $12, but I do plan on holding that. Oracle is one moody sucker. Let me tell you, this kind of wick here, it just, if I didn't see the count, if I didn't know what this means is You had an institutional buyer that chased this breakout and they sold it. Okay, that wasn't retail. One big split trade block, whatever, where they came in, they chased it from 221 roughly to 245, and they dumped for that 15 bucks. That's what we're seeing all over the place with these institutional investors, is they're taking these small pieces and they're running. So we're seeing a lot of these wicks where we otherwise shouldn't see it. Okay, so if we look at this, we've got, like peaking drive 1, peaking drive 2, peaking drive 3. So I'm looking at this entire leg that we come in at as our first impulse that we have. I think I'm going to end up extending this and saying, hey, this is our 1, this is our 2, this will accelerate our 3 way the heck up here to 361 if that's the case. So that's the reason I'm holding Oracle, because I do think it has a huge build out as far as AI is concerned, and I just think it's a name that's going to go in that direction. And honestly, it's one of the names that hasn't run yet, so sort of that second order effect is where my thought pattern. And then looking at SEI, my thought is, hey, Elon acquires this because it makes sense for his business. And hey, I'm willing to pay 65 bucks for it if that's the case. That's what I'm sitting on as far as cash geared put. SentinelOne, I probably should have sold it that high. So, again, a lot of stuff is not sticking. So you might want to take your profits and, run. But I'm looking at SentinelOne is another name that I think is a benefactor from AI. I think something comes out there. I like the way the structure is, as long as we don't break below this 14 buck. Near protocol. Good look here. I mean, we're just getting out. Really is not back in the bull control until 520. So very good shot at a double here. I mean, as long as it doesn't break below this shelf at 191, which is what, 30%. I mean, I think you got a good shot at coming out. This, to me, I'm going to look at this like a 1 right here. So if we just measure this, I haven't thrown a fib up there on that. Should do something like this, but let me throw a fib up there just so we get a visual on that. Measuring this entire leg here should be tighter. However, I don't think it's that tight. That would mean it needed to be a leading diagonal, and that's not a leading diagonal. So, it probably pushes to the 78.6, so it's probably an extended push. We could push right up to about 50%. This shelf is a good spot for it to test and reject for a 3. So structurally, that's what I see it looking like. So again, I wouldn't worry about it until it breaks below that 197 and, obviously up around 520. I probably would take some profits up there, depending on how much you own. All right, Rocket Labs. Just, space. Look at the right side of my screen here. Look at what space did. I mean, it's just the entire sector dumped. And it's a little early. Actually, it's really, it's the 3rd. Now, and honestly, I didn't hear the news today. I was out with my cardiologist this afternoon, so I actually didn't listen to it. But I heard SpaceX could go public the 4th, which would explain this if that's the case, but I have not seen any confirmation that that's the case. And to be frank, outside of rumors, I haven't seen any confirmation that it's going to happen on the 12th either. So, but that explains what's going on with space here, and that's going on with Rocket Lab. So I think this becomes a ending diagonal. I think we pull back to about 109, and then we probably take out the 5, and then either it's going to be quality, a little extended, or elongated. So the question is, do we do this, or do we actually keep going higher, or do they really suck the liquidity out of Rocket Labs for SpaceX? That's the problem there. I mean, $1.4 trillion is huge. I mean, it's huge. There just is not that much liquidity in the stock market. I mean, there is, but not everyone's going to sell. You have all these funds that have specific positions. They're not going to screw around with SpaceX. They're going to take their 5,000 shares or whatever they're structured to buy, and it's going to be extra liquidity. They're not going to sell for that. So, retail is only going to be 3%. So the other 97% or 8% or whatever it was, the balance is going to be institutional investors. And there's only going to be certain things they sell, and the most likely candidate is other space stocks. So they can pump AST, then dump SpaceX, pump SpaceX, then dump it, and turn around and buy back the other space after they've got it to totally flush. That just is how their logic, or how I would think their thinking would be. All right, so let's look at TE. Huge wick off I'm just counting in my head. I don't really see it. This is really, we have, I mean, you could say this is Peking Drive 1, Peking Drive 2, but it's too extended. If this, that's the challenge with such an extension. If this is our 1, 2, I mean, we're going to be much higher than what I projected on this count. I mean, we're going to go all the way up to the 2618 if that's the case. I mean, we could right here. I mean, we're going to come in. And reason is I'm just looking at our peak. So you have like a peak here, a peak here. So, let's call this as 3. So but we don't have a back test there. So this is an extended trend, right? So, it could push up to about 22 from here. Totally viable. Taking out these highs at 1686. I'm going to use the term given because I can't imagine this kind of push compared to this kind of push, this kind of push, this kind of push doesn't take out the high. Now, do we get a couple pennies above it and then we flush? Yeah, we could, because that's the MO of what the market makers are doing, is they're doing a lot of stop runs on a lot of different names, which is why we see these huge, they're just pulling their paper and going the other direction. Once that it hits that, gamma zone, this is really, it's shallow. I mean, our gamma flip is way the heck up here at $41. That is where the conviction level that a institution will sell there is like better than 80%. In other words, gets up to that extreme. That's where their triggers, their systems are going to just boom, and they're going to sell for that reason. All right, RGTI. I think this is just a slight pullback. I think this is our 1. This is our 2. And we're looking for a 3 up here somewhere around 36. Actually, I took profits on that, and I kind of regret that I did. But hey, seems to be the MO this year. That's all right. It's the nature of the beast. So roughly about 35, 36 bucks is I think where we go. I think we do take this whole. I think we take out this high. Can't tell you exactly why it got up there, but that's unless it breaks below that 19 bucks, then it's a reversion of the mean candidate and it's back to 2 bucks. That's the hard part about that as far as small cap. All right, looking at Hood. Now, I closed out Hood solely because of the news I heard coming in on MicroStrategy. As soon as it hit my radar, boom, I closed. And the reason is it wasn't washing. It was washing into Bitcoin then, okay, but it was not washing into Hood yet. And honestly, I just didn't want to ride that if we were going to have that massive flush down to 56K and be on the wrong side of the trade. I've been there a hell of a lot more than I would like to have been this year on different setups. So, that was a good reason for me to cut and run. Right now it has pulled back, so that wasn't a bad. So I think this trend line holds that we have right here. This sort of that comes in very much like right here. It's stepped up to this wick. So, as long as it doesn't take out this 76, we should be good. I mean, there's a buy box down a little bit lower on that. Measure it. So it's, it's like right at the middle at 62 fib, roughly about 76 bucks. This would be the buy box. That would be quality right there at the 76.75. So about $6 lower than where we are. Might be a good spot to start enter. It's has symmetry with that trend support, as far as look, and that might be where I enter back in there. So, all right, now Google just is that whole deal with Berkshire Hathaway is this right here. Now, they have 275 billion, I think it's CoreWeave and SpaceX. In other words, and unless SpaceX fails, and I know they probably have a better deal on shares than some of the other players because probably the size, but I do not believe that price or those shares are priced into Google. Now, what that means is for longer term liquidity, right? Realize what the upside could be. I mean, CoreWeave has some huge problems, debt problems, right? So CoreWeave's kind of an iffy for me because of that debt load. I mean, even though I like Oracle here, Oracle is heavy load, running into the debt wall and not, Google being the example, a AAA rated company had to go to BB credit or B plus credit because they couldn't get the sweetheart deal in. Well, do we really think CoreWeave and Oracle are going to get them when they have to roll? So Oracle has to roll November, December. I don't know exactly when CoreWeave does. So CoreWeave's kind of an if there for me. But SpaceX, literally, if we pump on SpaceX and do what typical IPOs have done, and assuming the offering's at $100, on the secondary market, I'm hearing anywhere from $500 to $1,000 already. And then if we turn around and see a merger, because realize he will do the merger really quick when the liquidity's there to merge SpaceX and Tesla, because that's the smartest move, because that pulls the most money out of it. We're looking at a rocket ship. I mean, literally, and I don't know what percentage of that 275 billion is SpaceX, but we're talking maybe a 5 to 10x gain if that's the case to Google. Well, where's that going to go? That's going to go into share value. They're going to have this huge chunk of liquidity coming. So, I mean, longer term, that's solid for Google. So I would love to get back to my buy box around 322, open another position in here. That's just my 2 cents. That's what I like. All right, PWR, Quanta Services. I'm just doing my count here. Where we just put in 3, it looks like to me. So I'm going to call this our 1, 2. Actually, really not. Yeah, we'll call this a 3, call this a 4. And it's going to put in a 5. Most likely equality. Click the wrong side there. Equality is going to be about 50% between the 1618 and the 26. So roughly about 970 from where we are to the upside. It's not broken really till this body gets taken out here at 565, but I probably wouldn't give it 50% of this candle. I would be trimming if it gets below here. You get a close on the body of the candle, roughly below about 680. I probably would trim a little bit and then wait and buy the rest back above 715 because it could flush. It could. That's pretty aggressive candle. We don't have any history of that kind of recovery, so we don't know how it's going to pull back. So we don't have a clear MO. And quantum, I assume Quanta has something to do with quantum. I don't know what they do. But realize the timeline on quantum is still, the timeline's not 2026. It's probably not 2027. It may be 2028 or 2030, but that would be my thought pattern on that. Depending on where you own it from. If I own it at $400, I just hold until my trend support takes me out. So I do confirming trend support. I just run a solid trend support off this level. Unless it takes out 614. If I paid 400 for it, I'd hold. Looking at USAR. Now, this is a horrible wick off, horrible spot, even though I still look at this is 1, this is 2, so 3 should be up here. So as long as we don't take out the body of this 2648, I'm based, really it's down here. First one that came out, so 2596 is a little bit lower. I pushed it up to that next body because I would trim half there. Because the most likely it gets below there, it's going to continue to break down. You probably get a better price down around 22, 24. That would be my thought. And again, this is going to be attached. All metal, rare earths, silver, copper, all the mines that require sulfuric acid for processing are running dry. It's going to wash into their P&L, which is one reason you don't see me pushing a lot of those names right now. I actually like silver more than not because the supply is pretty decent on silver. And when the mines actually start shutting down, we should see a larger pop in that because of the quantity of silver that so many of these miners are sitting on. It's not the same as other scarcity in metals because there's not as big of a market for those as there is for silver. And that's the reason I like silver in different. I like platinum too, but silver, I think for that reason, has more potential of having upside even with the sulfuric acid. All right, let's look at ENS. So, I think our 1 is in here. I think I have my count wrong. No, I didn't. I laid it out that way. All right. So this is our 1. This is our projected 3. And then we have a projected 5 here on this impulse. So from this leg to here is what I'm projecting with this count internally. So I drove 2 waves. So we have a much larger structure, and internally, I think we pushed to the 3618 at one time. Has a lot of upside here. Solid looking chart. Love this wick off right here at the shelf. That's just a beautiful look for a pump and run. We're seeing the squeeze in RSI. This is mound 1, mound 2. We're building it out now. So we're probably get a mound 3 about here. So it may pull back, but I would think that we get an extension. I would think they grab on, hold this and keep it running. That would kind of be my thought. All right, let's look at MP. Maybe we take out this 74. I'd say pretty soon. The only thing I don't like are these wicks, but it likes to do these wicks here when it rejects, right? Did the wicks here. Did the wick way the heck down here. Notice that, and we had the huge breakout afterwards. Did this wick down here, back tested, then we had another huge breakout here. So it likes to put in these shallow wicks and then come back. So the MO is that it probably breaks out from here, and we're looking at this as we're in wave 3. So this is our wave 1, this is our 2. Leading diagonal, challenge with that is it probably does something like this in skirts. 618 is a viable spot, happens to be where we wicked off before. So we probably get an ABC structure right there, or at least symmetrically when you're looking at the chart. That makes the most sense. So maybe something like this should be pretty shallow. I don't think we'll take out the body. I think this would hold at the 86.56, just with the look of how the structure is. That's kind of what I would think there. So, all right. So hopefully I covered everything. Anyone want me to cover anything else? Amazon. It's rejecting right there. Almost dead at my 3. Overshot it a little bit. How perfect was that draw, huh? Peaking drive 1, peaking drive 2. I think I even said it could overshoot right here. So it probably comes back to 227. I think you had it from 200, didn't you? It's tough holding it with this candle, looking at this. So this I think the challenge that I find myself in as I'm looking at these names, it doesn't matter what name, Bank of Japan raises 100 basis points. I would be surprised if we don't come down 10%. 8, 10, 15% from that. It's going to be sheer panic that comes into the market, because what that does is it's going to suck the liquidity out of U.S. market, because all the margin calls that happen in Japan for all the investors, and there are huge amounts of capital that are invested in U.S. equities out of Japan. So the challenging part is I look at it this way. So is it an ABC? Is it an ABC? All right. So the point here, you probably can get a better exit around 272 if you take the heat from the first flush. All right. Just candid. All right. Is it an elongated ABC? So we have like a deeper one. In that case, you're probably not going to get a back test to get a better exit. Right. So those would possibly be the two outcomes. So if I wanted to hold this, I would look at covered call, but I don't know that that's necessarily a choice. It's challenging to hold up. I think I would rather sell cash, take out my my common shares and sell some cash secured puts down around 230. I don't know what the premium is, although 235. If they get put to you, you're still going to be better off than you were losing down to 200, and then the market gets into this recession and we don't recover for 6 months or a year. Then you're sitting on this close to being BE or underwater even, because that, that's sort of my mindset is I don't see a positive fit to the economic circumstances that we're in once it starts to break down. So if we get that catalyst, the more you own, the more heat you're going to take, because it's going to reprice. So, and I'm basing this totally on the candle, and what I see the MO of this stock is not only on top of that, you have this wedge look here to the downside, kind of here. So, equality is back down here around 213. You don't really want to give up $37 unless you have to. That would be, sort of my thought, And, when we look at the IPO, as far as I view IPOs as a lottery, because over the years, I've had some solid winners. But at the same time, when you have so many names that are trying to piggyback other IPOs, like clearly Anthropic is trying to piggyback SpaceX because they're trying to get pieces of that FOMO. Those names correct more aggressive. So unless it's total risk capital, I would be really limited once it goes public. That's just my 2 cents on that. So, all right, let's look at PLTR. And honestly, I've been in this conservative mode way too damn long because it's driving me nuts. Okay, so, looking at where we are, I just flat out got stopped on my position. So it was just letting the process work. So it didn't get any follow through. We got one general, got a total rejection. Chances are we're going to come back and test the shelf. And I may, I'm not saying I will. I may give it another shot back down here at this support at 134. But honestly, there's better setups than this noise right here, because this is the noise I want to stay the hell out of, right? When we've got this ceiling and we're rejecting, and then we got this floor we're bouncing off of, but there's no conviction to get us follow through, to get us up and out. That's the kind of chop that just eats away premium, and you really want to try and avoid that. So that's kind of my thought on PLTR. All right, let me go back and do TLT, just because I know most of you missed that. TLT, I still think we take out this low. I just do. I just don't see, even though I see some conviction in the options, and we're going all the way out to the January 27 leap, which really they're not leaps. They're what, 8 months, 6 months? I still think it pulls back. I think with what the Fed is going to do with Japan, because Japan's a huge problem right now. We have runaway bonds in Japan. They're runaway. I mean, they have lost control of them. So that means we don't know what that outcome is going to be and how aggressive they will be when the panic hits. When the panic hits, that's where you can see something like, instead of a 25 basis point hike, or because basically we've had one hike in 40 years come out of Japan. The reality is they're in a worse enough, a bad enough spot right here where they probably need to raise 100 basis, but the calamity that's going to cause to U.S. equities is enormous. I would say the exposure is at least 8% of the indexes, and it's probably closer to 15 or 20 with level. And that just, I mean, literally it can pull us down. So, and one of the things, you'll just see this huge flush candle if that's the case. They raise 100 basis points. I mean, the biggest candle you've seen here, something like this, roughly a $3 move to the downside, I mean, is real easy. So seeing 82 again is great. Before, when I said it gets above 84.41, I was going to enter. I didn't enter because there wasn't any flow when I looked at it at that time. So, I use the same process when I look at a name. If the conditions aren't there, I don't take the trade. Right now, the setup is there, the flow is there. It is. I'm not going to say it's not. All right. The problem that I have is my survival score is 8.8, right? We have bonds in Japan going hog wild crazy, right? We have a lot of distortion that's going on inside the market. We have these pumps and these dumps almost across the board. We have breadth that all of a sudden expands and then evaporates. Well, I shouldn't say just expand. Like for weeks, we were declining. Then we get one decent expansion day where I had some hope, and the next day it's gone. Those are all internal signs that something is coming. And sometimes we just don't know what that is. But, and the hard part, I'm going to go back to the S&P for a second, because the hard part here is we don't know what's coming. That's all we do is get the tell that says, hey, we have too much distortion here. It's got to be fixed somehow. So is this the fact that we have all this money that's exiting crypto and looking for a new home? And are we going to get this huge pop in equities? Or is it the inverse where we get this panic and we get this flush? God's honest truth is when you have that kind of squeeze going on, the dynamics in the market, picking the direction is difficult. Sometimes you just have to sit and wait until the market decides, which is one reason we look at the different technicals to try and give us a better shot here. But right now, I just candidly, my bias is to the upside. What I don't want to do is I don't want to risk my gains that I've had for the year. So I don't want to give it back with the tumultuous market that I see going on here in the next 3 to 6 months. I just don't see a remedy coming out of the Straits of Hormuz here, and that's going to get resolved, because right now we have a problem. We can't invade Iran without congressional approval. So whatever action we have to take is either on the basis of drugs or some kind of emergency measures, like to deter an atomic bomb, right? Or a nuclear warhead. But that's limited. So there's a limited time frame that we can go in there. And on top of that, we can't appropriate the troops because the funding's not there, because Congress hasn't signed the bills to do so. Even though the military's funded, the war project itself, we're at $92 billion right now in unfunded appropriations for the military for what's happened in Iran already. So we've been robbing Peter to pay Paul to fund what we've been doing there now, because it doesn't have the funding mechanism from Congress. So, we're kind of in this quagmire. We need congressional approval. And to be candid, right now, from everything I've heard, the vote's not there for Congress to say we're going to war because the right circumstances are. So, frankly, I don't think we're going in to fix Iran. I mean, it's almost like the Iran-Contra scandal all over again, where it's going to be 6-7 years, where we have this diminished war. And the challenging part is, if the Straits of Hormuz ends up being closed for an extended period of time, I don't even know that we can accurately predict how that's going to affect inflation or the different equities. And that's the quagmire I see here, because yes, I see lots of opportunity there, but I also see more risk than I've seen in the last 10 years on the table, where there's a likelihood that the wrong event happened. We have this massive drawdown event. Now, we get a total dynamic shift, and breadth just absolutely totally expands. So let me just go, I'm going to switch to a different, I'm going to go to option strat for a second. And I'm just going to go to the flow, switch my screen. Now, notice our breadth here that we have. I mean, notice the names. Now, we have a little more spread here at the end of the day. We have some names where we're pumping. I mean, and actually the breadth right here after the close is actually pretty decent. The thing is, tomorrow morning we'll come in and there'll be 5 to 7 names that they'll be holding through the morning. So they're holding through pre-market and then they're dumping in the New York Open. They're not holding those positions. That's the challenging part, is we need that breadth. We need this column to roll all the way down where we have 50 names, where we have $10+ million entries in there. This number needs to be closer to 150 instead of 64. Right? The total number that's there, 15055, something like that, for us to have that breadth that I get comfortable with. We're saying, hey, we are in this solid uptrend that's going to stick. Once we get that kind of confirmation, then the dynamic changes. Now, when we enter those positions, there'll be many more positions that stick. And hopefully, I mean, that time, it might not come this year. Be very candid. I mean, we might be stuck in sort of this stagflation kind of mode, for an extended period of time. So that's sort of my thought. I don't want to just personally, I don't want to hold that risk. I don't want to encourage other people to hold that risk right now with the circumstances of what's going on in this market. That's just where I'm at. But right now the count, the charts, everything to me tells me we're going up to 924 in the S&P, and tells me we are going to, roughly 900 on the NASDAQ. And then we get a decent pullback at that point. And structurally, there's nothing that tells me otherwise. But it doesn't invalidate what's going on with the war. And that, I think that's probably the biggest piece to the puzzle is I can't find a historical significance outside of the oil blockade, right? Which was a different dynamic than we have now. And to be very candid, we ended up in gas lines for nearly 3 months here in the United States. You couldn't go anywhere. You were rationed. You could get $5 worth of gas. That was it. And that was when it was 50 cents. If you went over your rationing, you couldn't use gas. So nobody went to work. I don't think it hits that extreme because we're not pumping a large chunk of our own oil. However, if we, for example, if Canada or Venezuela all of a sudden decide to strike a deal with China instead of to sell to us, then we got a problem, because that's probably our 20% blend with WTI, and honestly, China's kind of in the spot where they may go offer a premium for those fuels to, drive that, because their economy is so dependent on imports. Just India is more dependent than they are, but it's where once there's so much scarcity where they can't get fuel to move freight, the economic circumstances in a country absolutely break down. And the challenging part for them is going to be the unrest that comes with it. So, it's not quite a civil war, but it's the same scale. So, this entire move can be taken out with one move like this, with the right circumstances. And be very candid, right now with what we're facing with oil, and the rumor has it that, or Exxon made the comment that all hell's going to break loose in 2 to 3 weeks because our inventories are going to be near zero, which means the refineries start shutting down because they don't have enough dirty crude to process, more fuel. So if they don't have the right, realize you can't just retool a refinery overnight. I mean, we're building a new refinery right now, the first one in the United States that actually refines solely WTI, West Texas Intermediate crude, right? We don't have one. So what we're doing is we're buying the dirty crude, the dirtiest in the world, actually, from Russia and Saudi Arabia and Canada, and then we're blending it with WTI to still pull the fuels. But the dirtiest crude is what we use to make diesel. So we can't, the diesel extraction process, the heat extraction process that goes on there is totally dependent on the dirtiest crude, because otherwise no diesel comes out of the oil. It's a minute percentage. It's like fuel. So, it depends on which fuel we're processing. So, the one thing that I'm surprised, like AMTX, I'm surprised the secondary fuels haven't taken off. And the only thing, I can contribute that to is that somebody is not pushing it like we would think they should from a regulation standpoint. Maybe the EPA is restricting production that we don't know about. I don't know. But I would think the secondary fuels should be taking off more than they are right, and we're not seeing it. But that's sort of my take right where we're at. But I do let me jump over to my master list here. I want to go over here and I want to we got like so many red names. Now, Photonics. I'm just going to go through this a second because this has been volatile as hell. This is optics. And, Aditi, you're going to like this. And here, that was probably your pullback right there. I mean, we maybe get one more, and this is probably our 3, so it's probably tightened up a little bit, but we probably are going to go maybe to 130, 140 from here. Cash secured puts would make sense around $80 here, but MTSI, we get any pullback from this ledge right here, because this is going to be, this is a section that it's going to run. It's going to run. We got a little bit of a pullback, so we get back to this box, roughly about 286. Now, Marvel just absolutely long, and when I first posted Marvel, it was back around $100. We're up at $300 on it. I can't tell you the number of names that I pegged right here. And this was in March. I mean, geez, I think almost every name that I flagged in March has been moonshots. That's never happened to me before. So, but the look here, it's not even. You can call this 1, but I don't even really think that's a 1. That's such a euphoric 1. Let's just call that the 1. Let's call that our 3, 4. So 5 is going to take us up to at least another $80 to the upside. The only way to even try and buy this is wait for a pullback. It's to me, it's too risky. But your pullback gets back to 221, then it's a buy. But GLW is another one. I've got this buy box back here. I'm right. So we get back to about 154 on that. Cohere also looks good, except for it's already running. I don't think it's going to pull back at all. When we were here, actually, I think it was closer to here. It was April. I think it was right here around 297, looking for a pullback to 242. Didn't get it. AAOI is already recovering off of this pullback. Wicked off here, though. Still could come down and get our box here at, roughly 137. And then Fabernet, maybe we get a pullback. Roughly 539 would be a decent entry. And Lit, I don't think it gives us pullback. I think we're done already in the pullback just because of how green that second candle is. That's a solid 2-bar reversal. You generally don't get a clean pullback. You have 3 peaking drives in this leg, so this is an impulse here. If we get back to 740, it's a buy. But structurally, we have to, with what's going on with the chip problem, and we have a supply dynamic problem. We don't have enough memory chips that we're manufacturing to build out the existing planned AI infrastructure. So the only option is that we improve other forms of memory, and optic is really the optimal place for this to go. That's it. So all these names probably have just started. So, I'm looking at this as peaking drive 1, peaking drive 2. This is one of the names that I really like to the upside for an extended push. So this is maybe our 1. This is our 4. 5 should come around with some kind of equality. I don't think it gives us a pullback. And I can't tell you the number of times I've looked at these and I was like, maybe I should just chase the damn thing. Except for I don't, I'm at the stage where I don't want to chase. That's just me. But, looking at the 1618, I mean, we're looking at this could push to $2,000. And just looking at Micron after, I went and looked and really dug down into what the catalyst should be that's going, where we have more upside. And Micron has the most upside of any name because they have such a specialized product comes in here. So the most likely move at this point is to get something where we push. I mean, we're talking $2,000. I don't know that it happens by year end. And I would suspect it's not a straight line up. But right now, when you have these kind of gaps on the weekly, that's not telling you there's any kind of weakness here. That's excessive strength. That means they've sold all of their inventory, and now the people who have orders are selling those orders to someone else at a premium simply because there's no product. So, Micron is a name that absolutely has a huge upside. And, I when we pulled back, I think it was 960. And, I was like, no, I want 890, 895, and then I'll take another shot at it. That was a mistake. I should have held it, or held the cash secured puts, or entered something in at that point. To be candid, I just couldn't see, even though this is a red candle, we have a huge general, red candle, and another general. I was thinking that we would get a decent pullback off of that leg. So my mindset this is way overextended. You look at all the fibs and everything that's there. This thing should give us a pullback to, roughly 776. So if I'm buying at 850, I still got risk $70 to the downside. So as long as I structure my trade where it gives me room, then I'd be fine. But, we didn't slow down at all. So now the box has moved up. Right now any pullback to 880, is a good buy kind of thing. So, okay, with that, I'll call it a day, folks. Until next time, great trading.